All right, ladies and gentlemen, we're back. In today's tips video, we're going to be talking about traps in liquidity searches. This was a question during my cooking show. Yes, I have a cooking show. So if you guys haven't checked that out, it was my first live stream around 2 videos ago. So go back and check that out. That was a question. I said I would make its own video on this topic. So I thought it'd be a great subject to talk about for a tips video. So here we are. Now, let's talk about traps first, and then we will get into liquidity searches. Now, obviously, if you're listening, you probably know that I'm a supply and demand trader. So my how I identify traps is based on supply and demand. There's lots of other ways that people might determine it, like stop loss hunts or like how they determine a trap based on their own methodology. It's not like there's just one trap. Over time, depending on your methodology, your eye catches these traps, and it takes experience to see these. It's not like you can just watch this video and be like, okay, I know how to identify traps. I only trade traps. To be honest, I very rarely trade traps because they're pretty rare. I'm not going around looking, hunting. Where are the retail traders? Where are the retail traders? Where are they buying and selling? I'm really not doing that. I just trade my own methodology. So if you're trading different methodologies out there, it takes time for your eye to identify these traps. It takes experience, all right? So the first thing I do is when I pull up a chart, I obviously go directly to my supply and demand zones. But something I also notice that comes with experience is I also consider where these other retail traders are buying and selling. So when I first look at this chart, I notice that, hey, this is clearly looks like it's in a range, but if I want to be trading at fresh demand, I need to go down and to the left. And I see this fresh demand zone right here. I thought this was going to be a trap right off the bat because we have, hold up, let me draw this in for you guys. Let's just leave it red just for the fun of it. So what we have here, I saw this an opportunity for the institutions to trap a lot of the retail traders. Why? You're going to have range traders buying and selling this range, high and low. They're going to be buying down here. They're going to be selling up here. You're going to have support and resistance traders. You're going to have breakout traders trying to sell once price breaks this range. And then what are you going to have? You're going to have breakout retest traders trying to test, once trying to catch the sell once price comes back up there. And then they're going to try selling. And then what happens to the support and resistance traders? They're going to be, old support becomes resistance. So they're going to be, let's mark a line right here. I know you can't really see that. But once price breaks this old support becomes new resistance, right? So then they're trying to short again when price comes down, and they're going to try catching that pullback for the resistance to catch that short down. Now, right now, this is a big opportunity for the banks and institutions to trap the retail traders. Listen to what I'm going to say again. We have support and resistance traders buying this pullback right now, trying to catch the support. They're buying. Their stops are going to be down in here by this demand zone. We have range traders buying buying low, selling high. Their stops are going to be somewhere down here in this demand zone. We're going to have breakout traders selling. Their stops are going to go basically where it is now, just above it. They're going to get stopped out in that fake pullback. You're going to have old support and resistance traders coming back trying to sell this at resistance now. You're going to have the fake out traders trying to sell back down again. Okay? So there's lots of traders, lots of different retail trading methodologies that's going to be trapped right here. So I saw this as a buying opportunity. I explain it here in that picture. When I pull up a chart, I see where most of the common methodologies are looking to buy and sell at. This is just something that I see with time based on experience. I don't only consider where I'm buying, but I'm consider where other methodologies are buying. That's next level thinking, okay? Like I said, we're going to have all support and resistance traders buying and selling here, trapping 3 different kinds of traders. We're going to be trapping out the breakout traders, the range traders, the fake breakout traders. So there's a lot of traders that we're going to trap right here. I don't think the institutions want all these traders making this win. There's a lot of different methodologies that will win on this. Okay, so let's go directly to the live Uh, what is this, bar replay? So we go, price comes back down, test the zone, starts going up, and then boom. At this action, I was trying to catch. Let me quickly remove. I'm not sure why I put these here. When this happened, prices came back down into this demand zone, rally-based rally. I saw buyers exceeded sellers here. We broke downward momentum line. We removed supply. This is confirmation setup, guys. I was trying to catch this pullback, but being the greedy ass bastard I am, I tried to catch the very extreme for the best risk reward. So I tried catching this pullback on the 1 hour down in here on the like a 30-minute 1 hour. That's what I tried catching. But the whole conservative approach was buying this whole zone on the 4 hour. So we'll see how that turned out. Oh, we got a load. Okay, I'm back. Basically, just trading view just froze right there. But we're back to the live chart. This is where it is as of now. You can see how prices came back down to that daily, or sorry, that 4 hour demand and took off. I tried to catch the pullback at the very extreme. I didn't get filled. So those are the type of traps that I try to execute on and I try to make money on. I saw it as a trap. I saw a lot of different methodologies possibly getting trapped in this area, and we found a demand zone right below this. This is the same thing. If this was vice versa for supply, I would do the exact same thing. Okay, so I'm going to show you another example now that I tried calling out a couple months ago that didn't work at all. These traps are not always going to work, right? Some work, some don't. It's just based on my own experience. So let's go to the my trading view account. Where is the trap? Oh, pound yen technical breakout. Okay, so here was the pound US or the pound Japanese yen. I saw prices inside this range. Prices bouncing off support once, twice, three times, four times. A lot of support and resistance were buying this pullback. I bet a lot of breakout traders would try selling once price comes back up into it. They're going to have their stop just above this support line. You're going to have old support, and old support becomes new resistance traders becoming short here. What did we have just below all this? We had a demand zone. And this is how it played out. Haha, absolutely lost. I didn't take a trade in there, but I'm just trying to explain to you, not all traps work. Anybody who claims, you know, uh, their trap works 100% of the time, I'm sorry, but they're idiots. I'll say that to their face. Anybody that claims their strategy works, it's guaranteed to make money. I'm sorry, but they're a complete idiot, and I'll say that to their face, because anybody that has that amount of confidence about their strategy, saying it's a guaranteed easy win, 100% works, is a complete idiot, and you're a fool if you believe them. Okay? I got passionate there for a second. I got angry because I feel so. I believe in it so much like that. I don't think you can sit there and say it's 100% win rate. At this, every time this happens, this crosses over. Any strategy does this. You can't say it has 100% win rate. Come on now. Heck, if it was at 100% win rate, dude, are you kidding me? I'd be the most wealthiest person in the fucking world. Anyways, okay, next topic. We talked about traps there. Let's talk about liquidity searches. Now, what are liquidity searches? Liquidity searches are excellent for creating profit margin, and they point to liquidity. They tell us where the buy orders and sell orders are. So when I went to this USD yen chart, you guys are really familiar with this if you've been following my work for the past 2 months. Here we had this, a lot of people were calling this demand zone. And what did I say? I'm going to move it over like this. What did I say about this long wick? This is the imbalance of this leg out of this rally-based drop. Do you really think if there was such an imbalance, prices would have gone all the way up here? Because at one time, this candle was all the way up here. Okay, that was a big black candle one time. And then what happened? And then it shot down. So when I see something like this, a liquidity search overlapping this level like this with a big candle, that's telling me there's no more sell orders until the top of that candle. Because this just cleared all the sell orders until the very top of this level up here. Hope that makes sense. For prices, think about it. From prices to go to 108.8 all the way up to 109.4, you do realize that every single sell order has to be taken out in order for prices to go that high. You can't have sell orders not going that high. You can't have price going that high without first knocking out all the supply zones or all the sell orders. So when I see this as, hey, prices managed its way all the way up here before dropping. Let me just move this so you can see the wick. So before it dropped, it came all the way up here and then dropped. That told me that there was no more sell orders until at least this top of this wick. So what did I say? I kept saying we have to, I think I posted it. No, I didn't, but I'm explaining it to you, so that's just that much better. What we have to do to find a stack of sell orders, we have to go down to a smaller time frame to find the stack of sell orders where that level is pointing. And there is the 4-hour level that's sitting inside the daily. It's not the daily supply, it's a 4-hour supply zone. With that long wick on the daily, this long wick on the daily, all the way from down here. It was that long wick. This is the real supply up in here. We can see how that worked out. Prices came up into it. Liquidity search. What did prices come up into? Came up into supply. Think about it. The only reason, listen, the only reason for prices to go up this high in this candle right here that I'm over, buying has to exceed supply. There has to be more buyers. And then at this very point, at 109.279, there was not a single buyer willing to buy 1 pip higher, not even a 0.1 pip. So at that point, sellers took control. Where did sellers take control? They took control into supply. I hope that is making it clear. Traps and liquidity searches are hard to understand at first. They are. I totally understand it. It takes time and experience. I have trouble explaining it to my group sometimes because it takes experience. And I tell them it takes experience. And it takes a lot of time to master your eye to see it. I don't even want to say master because I don't like using that word. Okay, let's try to find pound. Like this is this Aussie USD. We're just going through examples now. When we had this, where is that? This Aussie USD. When we had this flash crash, this liquidity search, prices came all the way down here. That tells me that there is all the buy orders are now taken out till at least down in this area. So what is that doing? I mentioned how these liquidity searches, they also open up profit margin. So you bet your ass when prices were coming down into this supply, I was looking for shorts, catching shorts in there, catching shorts in there, catching shorts in there with the pullbacks. Because what this is telling me is that for the only reason for prices to go down this low is because there was a lot more sellers than buyers. And prices never would have been able to go down this low unless there was a bigger stack of buyers. So at this point down here at 0.67246, there was not a single person in the galaxy that was willing to sell this 1 pip more. This is the turning point from which buyers took control and started going up. Okay? It's the same thing as right here. Let's go to this example, GBP. Somebody just sent me a chart saying, hey, is this a supply zone? I said, no. Okay, so here was an example that he was drawing out, was this supply zone. He said, look, prices are coming up into supply zone. And let me move this box over so you can see it. And I mentioned to him, look at the imbalance. Look where prices started to fall from. It started to fall from up here. Right from up here. At one time, this candle was all the way up here. This tells me that buying exceeded demand until this point right up here, and then price fell. This is where the sellers took control at the very extreme. Notice how prices overlapped on this imbalance. That's telling me, hey, I don't want to look at this on the weekly. I want to go to the daily and see this. So if we go to the daily, I guarantee you we're going to see this smaller time frame zone. So let's go to the daily. And what do you see? Here's that level that I'm pointing to. There's that daily. This is where the meat of the orders are. That was price pointing to where the orders were. Okay, I think I explained it pretty well, talking about liquidity searches and traps. Remember, traps are just based on experience on the trader's methodology. It comes with time. Don't go out there thinking you're going to go around trading traps, because they don't always work, and they don't always, they don't always work. That just goes for everything. Same thing with liquidity searches. It's something that's based on experience. This is a more of a advanced concept that I want to talk to you about. So if we go to any time frame, let's go to Euro USD. I don't know, let's check out the daily. The only reason prices are going this low like this, I'm looking at this right here. That's telling me that's a very volatile situation right there. It's a lot of movement. This wick that went all the way down here, it went directly to a demand zone. And that's telling me that there's no more single buy orders until at least down in this area, right? So if we go down to a smaller time frame, we're probably going to see a drop-based rally. It's pointing. It's literally points to where the demand is. There it is too, another one. Look, before prices ran all the way up here, what did price do? It fell. What did it fall down into? It fell into demand. Okay, so let's go back to that area we marked out. And boom, there was that level of that liquidity. Where did prices go down to? It went into demand. Okay, now I'm sure if you go down to even a smaller time frame, you're probably going to find even a smaller time frame demand zone. It just points to where the orders are. Does that mean you go down and just buy it? No, but it's pointing to it. I wouldn't want to say this is a demand zone. There's no way I would say that's a demand zone. I would say, hey, like, you might find like a 5-minute, like this is a 4-hour time frame. You might find like a 30-minute demand zone down there, and we'll see. Let's go to the 30-minute demand zone. Is that it? I lost track of it. No, no, no. Here it is. See, we still can't even see it. There it is. It's making it more clear on the 30-minute, but there's that 30-minute. I guarantee you that if we go down to a 5-minute, we'll probably see a drop-based rally where this really started from. Let's go to the 5 minutes just for the fun of it. We gotta go back here. Oh, I'm not getting data. Uh-oh, we might be out of luck. Let's go 15-minute. Hold up, guys. I know I'm going all very fast. And boom, here is that liquidity search that I pointed to you. Drop-based rally. Now, this is a 15-minute demand zone. This is not a 1-hour or a 4-hour or daily demand zone. This is a 15-minute demand zone. Let's go see how this worked out. Oh, crap. Hold up. Sorry, guys. I'm really screwing the pooch. I think it's good. I think you guys are getting this. If it's not, it takes time, right? It really does take time to see this. Feel free to message me saying, like, hey, man, is this a liquidity search? Is this a trap? You know, if there's one thing for you guys, I want you guys to take out of this is to consider where others are buying and selling in the market, and also liquidity searches too of where price is pointing to. I'm talking about these big wicks, and here is just how this 15-minute demand zone worked. Held up price for a little bit and then dropped. Okay, so that's that. Just wanted to bring you that quick little video. This was not quick. I think this was like 15 minutes or something like that. But once again, guys, message me if you have any questions. I mean it. Okay, hit me up if you guys have any questions about supply and demand. Liquidity searches, just remember, liquidity searches are these long wicks that overlap zones or they point to zones. Think about it. For a price to go down to so low to a certain level or so high to a certain level, it has to wipe out all the buy and sell orders in that area that means that it opens up the profit margin and it points to the order flow. Okay, that's it. Cheers, guys. I appreciate you guys watching. If you have any questions, let me know. And that's it. Thanks. Have a good one. Bye-bye.